Good morning, welcome to the Fit to Flourish podcast. Let's talk wellness, finance, and growth.
What's up, guys? Mr. Fit to Flourish. In today's video, I wanted to talk about how to find stocks to invest in. So we talked about stocks to trade options on, and it's kind of similar, but a little bit different. And I want to tell you where to be picking these stocks up, because it's pretty simple to just invest in stocks, and you could do better than your financial advisor, or you can really just kind of beat the S&P 500, to be honest. So, and the S&P 500 gives you a 10% return over 10 years. So, all right, the average of 10%. So here we go. What are we looking for when we're investing in stocks? The first thing you're going to want to look at is, all right, so what is the trend of this stock? So I'm going to take off all of these indicators so we can just look at stocks in general. Actually, that's not the first thing. The first thing that you want to look at is, what is the market cap? Okay, the market cap of the stock is going to be extremely important, and that market capitalization needs to be kind of good. Okay, so we usually want to be at least trading a mid cap to large cap stock. Why? Because that means that it's a pretty good size stock, a pretty good company with tons of money, of course, and it's being highly traded usually. And you want the volume, you want to look at the volume too, the average daily volume. You want that average daily volume to be over 1 million. You want it to be something that's kind of liquid and that has a lot of investor interest in that stock. Okay, I would stay away from small cap stocks unless it's a stock that is in a sector that is in play, like something like AI, where the company's doing extremely well, it has good leadership, et cetera, et cetera. You want to stay away from small cap or penny stocks. Penny stocks are extremely cheap stocks that trade at less than $5 per share. Usually have market caps in the millions to hundreds of millions. These can be prone to schemes that can drain your entire investment. So I would stay away from penny stocks and small cap stocks altogether. Okay, not financial advice, by the way, but this is how you choose. This is how you choose stocks to invest in. All right. So you want to look at the market cap. It needs to be two billion plus, and then the volume. So when we're looking at volume, that's over here. The average volume needs to be over 1 million. Another way that you can kind of find some stocks to invest in is if you just go to the S&P 500 and you look up what stocks are in the S&P 500. These are the largest 500 stocks in the New York Stock Exchange. Okay, you can look at what's in the S&P 500, and then look at some of the top growers in that in the S&P 500, and just kind of choose those stocks and put them in your portfolio. Additionally, you might want to be looking. So let's write some of this stuff down. So let me go higher. So it's not so much. There we go. We'll go in here. So we're gonna go how to choose stocks to invest. Okay, because I talk about day trading, swing trading options. So let's talk about investing. This is pretty simple. When I first started investing, I took my investment portfolio from I started with just 5K and went to 25K in it was like 8 months. But right now there's a lot of high growth stocks that are pretty easy to just throw money in, and then it just rips. So you could do the same thing. It's super duper easy. So investing in fastest growing S&P 500 stocks. And if you don't know what the fastest growing ones are, you can use what's it called? Screeners. So you can use screeners. So use screeners, and it's easier now because you could just use AI. Just use AI. Ask it, hey AI, what's the fastest growing stocks? Blah blah blah. But you really want the stocks to have a volume of over 1 million. Okay, volume of over 1 million, and then you want it to be a mid cap to large cap stock. Okay, that value of the company needs to be pretty good. Okay, and then additionally, you can choose big names familiar. So big names that you're familiar with. So that would be things like Apple, right? Apple, everyone has like an iPhone. Everyone has a MacBook. Apple produces a lot of Apple Watches, a lot of technology, AI type stuff, okay? So, it's a good company. It's a long-standing company. So, big names that you're familiar with are typically really good companies that are being highly invested into, and they have the teams, they have the CEOs, the executive boards, the investors, the supporters to keep that stock afloat and to keep it moving on the up and up. Amazon, everybody uses Amazon. Google. Let's go. Robinhood is a new one that's kind of growing right now. Everyone uses Robinhood, and they're doing a lot of in terms of new financial type services, okay, and products. And then of course Nvidia creates AI chips for a lot of stuff. Tesla, so a lot of the Meta with Facebook. So a lot of these companies that are you're familiar with, they're usually big name companies. They're usually large cap stocks. So I always go to their financials and I look at what the volume is. Oh, average volume 56 million. That is insane. That's really good. And then the market cap 83 billion. So it's a large cap stock. Looks really good. Usually, like I said, stay away from penny stocks. Penny stocks are usually stocks that are like under $10. So you kind of want to just stay away from those altogether. You might be looking at them, and a lot of people ask me like, "Hey, this stock is like 50 cents. Should I get it?" And I'm like, "Yo, you're crazy just because you want to see a ridiculous GameStop play." Okay, like, no, that's not how you invest. All right, but another thing that I want to talk about is when you look at the chart. So, for instance, maybe you don't get Hood, maybe you don't get Apple, maybe you don't get any of these other stocks. Okay. And you want to invest in something that's pretty new. You're like, oh, this leadership looks pretty good. This looks really good. Da da da. What you want to look at is on your screen. This is the easiest way to invest, by the way. On your screen, on the larger time frame. So if you go to like the daily time frame, the weekly time frame, on larger time frames, on your screen, you want to see that from left to right on the screen, this stock is going up. This stock is in an uptrend. Okay. That means it is a stock that is growing. All right. Some people who are just getting into investing and trading that just want to retire so bad from their jobs that they're so desperate and they don't know how to trade. They ask me, hey, this stock is 50 cents. Should I get it? But I look at the stock. The volume is less than 1 million. The market cap is trash. It's like a penny stock. And then on their screen, the stock was at like $400 per share, and now it's at like $50 per share over the last 2 to 3 years. Okay, so what is that telling me? It's telling me that this company is absolute garbage. Okay, and then if I go into look at the leadership, if I go and look at their financials, also that's another way to look at stocks is look at their financials. Are they gaining quarter over quarter in terms of revenue, or are they decreasing overall quarter over quarter in terms of revenue? And the stocks they asked me about, their revenue is just in the dirt. Okay, their earnings is horrible, and the stock is going from left to right on the screen. It's going down. That's definitely not something I want to invest in. And they're like, no, like, but it might go from 50 cents to like $1,000 again. I'm like, no, it's not, because this company is unknown and they're not making any money for their investors. So definitely not going to happen. So just make sure these are simple ways, by the way. This is like the easiest way to invest, and investing really is easy. You can beat your financial advisors. I'm telling you right now, just do it yourself. Pick these stocks. You can literally just look at this list and pick these stocks. But yeah, just make sure it's going from left to right on the screen. It's going up. Simple dimple. All right. Volume over 1 million. Mid to large cap stock. Good financials. Big names that you know. On the screen, on the larger time frames, it needs to be going from left to right. It needs to be going up. Okay. Yes, you're going to get these pullbacks. So Hood here had this pretty big pullback. It kind of looked like a correction. Yeah, that's more than a correction. But it can have these big pullbacks, and that's okay. Now, let me tell you the best area to pick up these stocks, because now you're probably like, okay, well, now I know all these things about how to pick up these stocks. Well, where should I get in? Right? Like, do you want to get in at all-time highs? You can, but that's kind of stupid. Because look, we had an all-time high here. Well, not all-time high, but this was a near all-time high from like the past 3 years. This was an all-time high for a while, but this was the high, and then we had a huge pullback, right? So where are we getting in? Okay, you want to get in on these pullbacks, and this is gonna match up exactly what I'm gonna be talking about. So where do we get in? Okay, this is probably gonna be the best investing video of your life, bro. Like, I just gave like all the free gas. Like, this is how you invest. You just let it sit, and when you invest, you have to be looking on the long term, like 5 to 10 years later. Like, you can't be like, oh man, Robinhood went from 65 to 30, so it went down 50%. Oh man, it went down 50% in 2 months. Like, you can't be looking at it like that. You have to be looking at the longer term. So, all right, yeah, it went down 50% in 2 months, but in 5 to 10 years, where do I think that this stock is going to go? So this $30 number is probably going to be super irrelevant. 5 to 10 years from now, Robinhood's going to be worth maybe $700, $800 per share. Okay, so this is going to make it pretty. This move that happened back in 2025 is going to be super irrelevant. Okay, so anyways, where do we get in? So the best way to invest and the easiest way to get in is to pick up tons of shares at the 200 moving average on the daily time frame. Okay, so usually we're moving up, we're above the 9 MA, we're above the 50, we're above all the moving averages. Okay, but when we move back to the 200, which is this blue line, look what happens every time we get to that 200 moving average. And sometimes we'll move even past it, that's fine. But once we hit that 200 moving average, that's when big money starts to load up on stocks, because that means that this stock has not seen a level this low in the past 200 days. This signals an opportunity for investing. Okay, so when we get to that 200 moving average, load up on the stock. That is the easiest way to make a lot of money when you're investing in stocks, when you're investing. Okay, even day trading, you can set long-term positions there too. Anyways, but yeah, once we get to that 200 moving average, bro, load up. Look, we went from $35. This is April 8th. $35 on that 200 moving average, and then just April 8th to now, what is this? July 2nd, $35. We're now at $94. We're $98. We're almost what percentage? That's ridiculous. All right, so let's look at the price range and that percentage increase. That is a 180% return on your investment. Okay, and that's oh my god, that's in 3 months. Okay, so that is the best area to pick up stocks, and this kind of reflects how I was able to get like that 5K to 25K when I first started investing back in like 2019. Because I was picking up like stocks kind of like hood, like they're growth stocks like this that are a little bit lower cost per share, that can make pretty big moves because they're in growth sectors or growth stocks or stocks that are currently in play. All right, so kind of like this. So 180% gain in 3 months is absolutely ridiculous. Right. So yeah, so pick up stocks at the 200 moving average. And then what about when it's ripping? Feel free to take profit if you like to. Or like I said, this is a longer term outlook. If you're satisfied with the 180%, which I think is absolutely ridiculous, you could take profit. However, understand that this $35, like I said, we could in 5 years, this could be at $700, $800, okay, in 5 to 10 years. So when you're investing, you have to look at the longer term outlook. And then what happens when we pull back? Okay, you're going to get these pullbacks. You can do what's called a dollar cost averaging. DCA. Dollar cost averaging. All right, dollar cost averaging. So what does that look like? So dollar cost averaging basically looks like, all right, so the stock just went up to 90. Oh, but now it pulls back. Now it starts to fall again. Okay, it starts to fall. But what did I say? Once it hits that 200 moving average. So let's say you started picking up more stocks, more shares here on the way up. Now your average price is not that $35. Your average price, let's say now, is like $70 per share. But then we fall and come all the way back down to an area here at like 40, 48. Okay. Well, what did I say? Well, whenever we hit that 200 moving average, that's a good time to load up on more shares. So if we come back down to that 200 moving average, you probably want to load up on more shares and get your average cost per share down a little bit, because we are going to be making that move back up. All right. But anyways, hopefully this video helped you quite a bit on understanding how to invest in stocks, what stocks to pick up, and basically where to hold, where to buy, and what to look for in detail when you're picking up stocks. It's your boy, Mr. Fit to Flourish, and I'm out. What's up, guys? It's your boy, Mr. Fit to Flourish. If you like this content when it comes to trading or fitness or just growing in person, feel free to click any of the links in the bio. So we have a link for our Discord for trading, and that trading Discord, we have a free 3-day trial that's going on. But if you're not someone who really likes trading, or if you want to grow as a person in terms of mindset, your finance, your health, wealth, spiritual fitness, and you like that content, we do have a group specifically tailored to helping men grow. That Discord link is in the bio. We have a free section, and then we have a paid section where we go more in detail and do one-on-ones. If you want to do one-on-ones, again, those links have all the things that you want to see. If you want to see more of this content, you like this content, keep liking, subscribing, and doing all that YouTube-y stuff. Check out the Discord down in the links below.